Hello, everybody, and welcome to this event organized by Bias Business School alumni on new opportunity in the world of fintech. I am Dr. Marchese and I am the academic course director of the UG degrees in finance and the founder of the new degree in finance with data science launching in October 2023. And it is my pleasure to welcome all of you, our alumni, current students, and some prospective students. As you know, at the forefront of Bias educational mission is our ability to link what we teach in the classroom with what is actually happening in the industry. And in order for us to be successful in this, we constantly keep an eye on the most recent evolutions and hottest development in the industry. Now, fintech nowadays, it's one of the hottest new area of development in finance. So we decided to organize this event to bring you two amazing keynote speakers, which will discuss what is fintech, how is fintech evolving, and very importantly, which are the new and interesting career opportunity in fintech for alumni and also for current students. After this, we have organized a panel which aims to link the discussion from the two keynote speakers with what we are doing at Bias. So the purpose of the panel is to update you and get feedback from our alumni on how we are evolving in terms of content and approach in our educational mission to account for these new opportunities. So as I mentioned, we are going to have two keynote speakers. Each speaker will have 15 minutes slot for their presentation. And at the end of their presentation, we will run a Q&A. You will be very, very welcome. Actually, it would be great. The great part of this event would be to listen to your question, and you will be able to post any question you want in the chat for both speakers, after which we are going to have the panel. So as I mentioned, we have two great keynote speakers. The first one is Dr. Ruth Van Hofer, and the second one is Dr. Nico Lux. They both come in with a strong academic background, but also a great hands-on experience in fintech. And they will be sharing with you from two very different viewpoints, the dynamics and the evolution of the world of fintech and finance. So I think it is now time for our first keynote speaker. Dr. Van Hofer, please, it's to you.
Thank you very much for the kind introduction, Malvina, and very nice to be with you here today. I'm a proud alumni of Base College that used to be CAS at the time I was studying there with my PhD. I will share my screen in a second, but just to give you a very quick overview of who I am. I've been spending probably around 20 years in the financial services industry, both from a regulatory lobbying perspective, from a standards creation and system development perspective, to working in a bank for many years, and now to be retired from banking since 2018 and working across multiple areas, which is actually possible today. So I'm working in investment with a venture capital fund. I'm advising different fintechs. Given my experience, I'm working with a Brussels lobby group around regulatory aspects that impact fintechs in the payment space. And I'm also a non-executive on a tech company board, as well as on a bank and on an exchange. So just to give you a perspective that over time, you can actually pick and choose different things to do in parallel when you've established yourself in the market to a certain extent. And I personally never stopped studying. I did 4 degrees. The last one was a PhD. And it will be my great pleasure to also support Malvina on this particular course that is upcoming. I'm very excited that Base College is actually focusing on combining the technology and the learning about the technology that's so relevant in the market right now with the academic angle. And in fact, that's something that I did myself in my PhD. I worked a lot together with the industry. I looked at new technologies and made it very relevant in an academic context to see what could happen next in the future. So not everything has to be quantitative and not everything has to be backward looking. I think academia itself is actually moving to be much closer to the market, which is a great thing to observe. Now I've prepared a few slides, which I will share now. Let me just hopefully make this a little bit bigger. Okay, so my presentation will really be a nice scene setting for today's conversation around what is fintech and what day and age are we actually finding ourselves in, and what does it mean for jobs as you exit university, or as you may decide over time to continue to study in one shape or another. I've done 3 degrees, which I've done next to working. So it is all possible if you're interested in combining academia with real life. And the first observation really is that we are living in a data age. It's not a new thing to tell you that, of course, but just if you look at the sheer exponential size of data growth that we observe in the market, and here we just have a prediction until 2025. We're talking now in zettabytes. I remember the time when we talked about in gigabytes. That's definitely long gone. It just gives you an understanding that the economy today, when we talk about the digital economy, is really all about data. And a lot of the data is still not very organized. We have a lot of data, but sometimes businesses don't know where the data is. The data also is very difficult to be compared with other data because there's no clear normalization. And the whole discussion around artificial intelligence that has been evolving, particularly in the last few years, even though the concept is much older, is of course also only something that you can actually apply and realize if you have clean data in a digital form. And that's certainly something that our financial services industry has understood, but putting that in practice is a very, very big thing to do. And many are struggling. And when we think about the sort of newcomers in the fintech space, particularly those that work with data or in data, they're starting to see this as the edge that differentiates them, and that really becomes interesting for banks in terms of buying those services and partnering with those providers. Let's see how we can move to the next slide. Now, data is one piece, and together with data is, of course, technology. Here, I've stolen a little slide from Wikibrands, which is actually helpfully giving a good overview of all the cool stuff that's out there. I'm not going to go through everything, but I think the first piece to mention is that we are moving into a new form of internet. We've had the internet since the 90s in terms of our sort of personal relationship with us as an individuals. And the internet used to be very much focused initially on consuming content. You could read articles, read about things that happened, but you couldn't really engage with it. And Web 2.0, which is sort of the next iteration since the arrival of Facebook, really allowed users to interact with the internet. So it was not only about consuming content, but actually also post things, feedback on stuff, and download stuff. And so this is sort of the phase we're still in, but we are very slowly now moving into what people label Web 3.0. No one really knows where we will end up with this. So it's a very fluid sort of experience we're going through, but certainly certain terms like the metaverse may have crossed your minds and your tables and your sort of research material. And this is really all about having much more of a physical experience with the digital world at the same time. And there are a number of enabling technologies that allow this to happen based on hardware and software. But there's also a number of technologies when we think about the broader industry, so outside what the metaverse probably initially is, which is more around gaming and around advertisement, that are actually enabling the next version of the internet to truly sort of evolve. And one thing we've mentioned here is the Internet of Things, which is, of course, the connection of different hardware and software items with each other. Everybody knows their Alexa at home, which I always say be very careful with this because it could be a cybersecurity vulnerability. But this is really about having both edge computing, which is also on the slide, which is all the little sensors that are capturing lots of data on the edges, and going deeper into the middle and connecting systems much more broadly, including your self-driving car in the future. And of course, our phones can be connected with each other too. Artificial intelligence is one thing I mentioned. That's certainly something that is still in its early stages, but I will give another example later on in terms of what's already happening out there. And the other thing is, of course, the overarching approach of how people share their data. Social media has invited people to share data freely, which most people are doing in a very sort of voluntary way. But very often your data, of course, is monetized by those entities that are enabling the platform. So you have the feeling that you don't pay for anything. But what it ultimately means that a lot of data is out there on individuals and it's not protected and it's not private. And that is something that over time, as things get more and more centralized with cloud computing, with the big tech platforms that we already see are being challenged by regulators around the world, we have to be very mindful that we take care of our data, and we hopefully can claw back more control on our data. And that also would go through developments such as digital identity. I leave it here for now, but I think this is a good slide to give you a perspective of the different buzzwords we see in technology. Now, all of this means, of course, that jobs are changing. I found this pictogram at the Brookings Institute, which is sort of nice to show how things move very much from labor-intensive jobs to semi-labor intensive to very digital jobs. And of course, on top of there, we have the software developers, the computer analysts, the data science people. And these are the jobs that are becoming much more interesting. And I would very much underline data science, which as we look to the existing financial industry as an example, which is of course a very big chunk of the industry, certainly in the UK and many other countries, data scientists are in high demand. And often the Googles and the Metas of the world can pay more. So you can actually demand your price as you are going into that field, for example. And banks need a lot more support in that space because they just haven't got the right talent. So the talent makeup and demand of some of the big incumbents is certainly changing by virtue of data and technology accelerating the way it does. Here's just a little overview around the fintech space. It's a slightly older slide, but it was quite helpful to see the context of origin and scale. We have, of course, the sort of traditional incumbent financial institutions that are there, but they still have to make technology investments and evolve. We have the very large technology providers that have been established and are very scaled. If we think about some of the Chinese big companies like Ant Financial or Apple itself, we have infrastructure providers, and we have the new entrants, whether these are the neobanks that we are seeing more and more all around the globe, or the remittance providers, the cross-border payment providers in the retail space. So it gives you a nice sort of overview of some examples. And these are really all firms that when I started my career didn't exist at all. And I think it's very important to be very close to see what happens in the market, because the market is itself creating new job opportunities that you might not even think about when you're doing a certain degree and you think, I'm going to be prepared for this, but ultimately there's a completely new type of job popping up. Just sort of a little perspective briefly before I hand over on the technology explosion and what it really requires from the industry. So certainly for the existing banks and asset managers and financial services providers at large, these guys are seeing that the existing business models are being challenged. Transparency is being pushed in by regulation. There has to be much more control on operational processes and resilience, also because of regulation and because of the increasing cyber threat. People will have to have a technology mindset because these organizations really now purely operate on data. And people have started talking about data as the new oil for years now, but this is really what these institutions have to absorb and include in their DNA, and they are struggling. And as I said, they do need fresh blood in terms of data scientists and all those technology-related jobs that really are not in the banks today. We also have new players and solutions that are really building on the evolution of the internet itself and all the technologies around. Just to name a few, you're all familiar with blockchain and distributed ledger, which has been very much showcased in the cryptocurrency space, but is now being used for, all these independent and non-financial, non-fungible tokens. It's very much leveraged in the metaverse. This is all about building Web 3.0 on the basis of blockchain technology and opening it up. And one of the ambitions there is really to remove the control of middlemen, to remove information symmetries, and to remove rent seeking that has been traditionally, of course, for example, done because of information asymmetries, and particular cases that we know about are in the financial services industry. So all of this move into the new version of the internet, the new version of how we engage with each other using the digital highways, is all about peer-to-peer and really removing some of those efficiencies that have existed in the past. And that, of course, will remove revenue from the existing players that still operate with that old lens. The same would apply to financial services when we think about trading. You can trade on new platforms, you can issue assets in a different way, fractionalize them, and really allow people to participate in the investment space in a much more democratic way going forward. So just to end up with the sort of key trends, the financial world is digitizing, which is a great opportunity, but it requires a lot of change, and it requires, universities and everybody forming new talent to be very, very focused on combining what BASE is exactly now planning to do, which is the academic and theoretical part with the applied part of coding, data analytics, science, etc. We have the DeFi space, the decentralized finance space, which might not be that decentralized. I may just add, we have the evolution of digital assets, and we need a support system around anti-money laundering, custody, prime brokerage to actually evolve this. So more and more firms will develop over time to create this parallel digital financial ecosystem. And of course, we have open banking, which is another very interesting areas in the UK, in Europe, and more broadly. We have regulators pushing for regulation of new phenomena, such as stablecoins. And we have a number of central banks being very excited about central bank digital currencies, which is a completely separate topic on its own and very much technology driven as well. So what does it mean for you as a student? Think about the jobs that even exist in this fintech ecosystem that hasn't existed 10, 15 years ago. Data science is, in my view, one of the biggest areas, and it has different permutations, different types of connotations, whether you're forecasting data, whether you're creating models, whether you're actually using very new forms of broad AI, such as agent-based modeling, where synthetic data sets are created, and you can actually model pandemics, you can model fraud in a digital space, you can model your algorithms that you use at the stock exchange. You could be developing new solutions from apps to broader infrastructure positions. Of course, many fintechs, out there are growing very, very quickly. They need good business managers, they need good researchers and economists. Then there's the whole investor space, whether you go with a venture capital approach to be a seed investor in very early stage companies, or you go to corporate VCs of banks and corporates, or into private equity. Lobbyists are needed, particularly for these new era of digital financial services that will have to comply with more and more regulation over time. We've seen the jobs of strategists and evangelists and neobanks. Of course, blogging and social media influencing that space is a very significant point. And in my view, opportunities are endless. You can almost create your own job if you're well equipped with the knowledge that you're learning at university and in the real world. And I think that beautiful combination that BASE is planning here is certainly something that will very much support you in this. So thank you very much for listening. I stop sharing now.
So thank you very much, Ruth, for this enlightening presentation. I loved the idea of data as a new oil, but obviously as we have to extract oil, we also must learn how to utilize data, consume data, and make the data speak in an effective way according to our objective in financial services. So let's now move to the second keynote speaker. Nicole, you have the floor.
Right. Thank you very much. Yes, I will introduce myself as well. Basically, my background is I have over 20 years experience in the industry as well. Mostly, I started in banking. I've been working in fixed income, capital markets, and investment banking for over 20 years. And then I rejoined. I mean, I did a PhD many, many years ago, and then I rejoined the academic area in 2016, actually, when I kind of equally, like Ruth, retired from banking, sort of. So I've had multiple careers in that sense. And in 2021 or end of 2020, we decided to actually launch a new fintech company. So I'm a co-founder of a fintech, and we've been basically running for 1.5 years or so now, and I will speak a little bit about that. And I also have a few slides to share, and I think I'm pretty much starting where Ruth ended, which I think works very well. So let me share my slides. It should now, hopefully you can all see that. So basically, I will talk a little bit more from the practical side about how to go about finding a job, what it means. And actually, I start similar where Ruth ended. I think here I wanted to show you the different areas that you just heard about, where you might find your sort of ideal skill set, or you might be interested in. And so there are several fintech areas or tech areas that sort of are an in between sort of finance industry and the whole sort of data science. So you can either, I mean, here, for example, you can see so you can join sort of the capital markets, pure banking type industry, and look into, if you're interested in trading, developing new tools for that, and you really like to play with all the forecasting algorithms, interest rates, etc. So that's, for example, one space. But you find really for all the different areas you might like, some companies just focus, like we said, on pure payment systems, and they're obviously very technical, but again, it requires all the financial knowledge behind it. The fintech I'm in, or we have launched, it was in the first category here of the lending space. There are a lot of platforms that address crowdfunding, peer-to-peer lending, things like that. Again, you always need to know the connection between, or understand the connection between the financial markets itself and everything you learn in a normal finance degree, but then you need to be able to connect this with sort of the whole modeling data science perspective, in order then to ideally communicate with the IT developers, who unless you're telling them exactly what to program, will not know what you're talking about. And that's where really there is a big gap. So I'm very happy to see that BASE is actually addressing this with a new degree, because there is a massive gap right now between pure finance people and people who actually traditionally just worked in banks for a very, very long time, and they're not up to speed with all the type of technology development, which is obviously very hard to follow, because every year there is so much new developments happening in that space. And then you have the pure IT programmers who also, they don't understand financial markets. So this communication between these two areas is very, very important, and there's not enough people who can do it. And this is one area where that's where a startup or a new fintech can lose a lot of time, and a lot of things can go wrong. So it's really important to have the right go-between for someone who understands the data science, the analytical models, and can sort of design all the algorithms, but then also communicate that how it should be developed further into an IT platform. So it's really an important process. And I want to go through, just give you an idea about a few stats when you're looking around, and I will tell you a little bit about the different sort of areas we see, and what I think is important here. I mean, here's just from the last quarter some stats, but I wanted to show you where we find, for example, where do you find what in the industry, which markets, which sectors, and for example, you see here that 30 new unicorns have been created. Every year, there's so many new startups, and that's why we said, I mean, you can create your own jobs, and you can find new jobs that you didn't think were there even a year ago. So if you look into the growth over the last couple of years, actually my launch apparently falls exactly in the high growth sort of area here in 2021, as you can see. I mean, before the inflow of money into that area was fairly stable since 2018, and it probably, I think you can probably see that it only started around 2014, 15 to really grow. And then over the pandemic now, pre-pandemic, let's say 2020, 2021, you have had some massive growth of new companies being launched and so on. And where are these markets? I mean, Europe is still a little bit behind, and it's just not as big as the US. Obviously, the US has so much more data. They are a lot more advanced in a lot of ways, and there's more capital available to push into that new sector. Europe might be sometimes a little bit not in that sense behind, but people are a lot more skeptical before they will move into the whole digital space. That's why raising money is a lot harder in Europe. But you will see, I will show you in a minute, that the UK is the best place to be in, actually. Just a few things that if you're looking where to join and where your skill set fits best, it's also to think, you might also want to think about, you know, at what stage you want to join a fintech company. So because you will start, I mean, as a startup, it would start with a whole seed round or even a pre-seed round. And that's an area where you have to be aware that there's not a lot of money yet. The seed round or pre-seed can start with 1 million to 6 million. And later will then go to the next level of 10 million and above. And then only after that has been done, and these first initial stages can take up to 2 years. Only afterwards you might target 50 and 100 million issuance of a Series A. But some companies might never want to do a Series A issue. They will immediately look for someone else to buy them. So while if you're deciding to join at the very early stage, it obviously means that there's not a lot of money to pay high salaries. And that's often where there is a little bit of I think it's often a little bit difficult for fintechs to find the right people and sort of get the mix right there, because most of your salary will be in shares, which is great if you think the whole startup is going to work out, then you can be a millionaire later. So it really depends. And then you can go into the later growth stages, obviously, when the valuation of the company is already over 100 million. And then you can go to the unicorns, and like you know, Google, Facebook, you know, they are one of those that have become unicorns. That's a company which has a valuation of over 1 billion. But you know, not all companies ever get there, and it's not that important because many of them decide to really be bought in an M&A deal by another larger company. So, and also that, I mean, it's important to understand all the setup of the how the share issuance works, what you be offered to negotiate the right deal for yourself. And also there, I mean, a lot of skill sets are required from the financial point of view to communicate with possibly VCs, communicate to shareholders, if you're sitting on the business end of things. So also how to value a company. I mean, as Ruth said, you can later on, you might want to join a VC. After you do a couple of startups, if you be successful, you can go into a different area and then look at them from another perspective. And there's a few more statistics I wanted to show you. I mean, the VC point is for me, at least was for us as a startup, a quite important one when you come to raising your first initial money. Should you accept VCs or not? It's always a difficult point. I was quite pleased to see that there's now quite a few of these companies that have put seed capital into fintechs, have not been VCs. If you accept VCs, it's a very tough negotiation. They will restrict what you can do. They will restrict your strategy, etc. So they are very difficult to deal with. They can push you a lot, and it always looks good to the outside to have them, but they're also going to make your life difficult. And that's where you have to be aware how really shareholder rights work, and how to negotiate the right thing to stay with your strategy. So if you end up being a founder in the early stages, there's a lot of tough negotiations to be had with your investors. If you then look into the sort of next level here, none of these actually surprising or shockingly for these initial, you can see already there are many in the above 10 million category here, but none of them is actually European. So again, Europe might not be, it might be sometimes a little bit more behind. Then if you come to the Series A, do you reach your target in the 100 million? Very good to see here. You can see already a couple of companies within the UK. UK has been doing very well in pushing the whole technology sort of fintech sector, and you find very good sort of participation in raising money and growing this type of business. And then you come to the really big deals finally. And again, you can see the sort of distribution here. This is just for Europe. So UK is definitely the biggest market, and then you do have Germany, France, etc., which are sometimes market specific, or they're whole European wide. So it kind of depends. Yeah, and this is kind of the main points I wanted to add here, and I will I think hand over to have a general discussion, and I will leave it at this.
Okay, thank you very much, Nicole. You have also very much stressed the importance of educating people to understand the financial aspects and also the technical data-driven aspects for the new career in fintech. I think we now have a generous amount of time for our Q&A. So at this point, I would like to invite any of our participants today to post any question you have in the chat. So the speaker or some of us will answer to the question. Mostly, I guess, these questions are for Nicole and for Ruth. So any question you want to ask, you can post it in the chat. Yeah, so Parsa is asking, I think to both of you, so you may both answer, about Philloop.
Yes, so that's a startup basically we launched, and it's in the lending space. Sorry, I didn't mention us more, but just in general. But yeah, I mean, if someone is interested, this is a digital lending platform which connects banks and borrowers for large real estate transactions. So who seek financing basically. So that's to finance large shopping centers, Canary Wharf estate, things like that. So and for that we have basically created a transaction, I mean, a sort of financing platform, which includes the loan management tools, data rooms, etc. And in 2021, we actually won a couple of awards for the best real estate fintech of the year from our industry, which is all real estate basically. And the idea is later to expand the platform to syndication of large deals, CMBS, securitization, which is the area I used to work in banking.
Excellent, thank you, Nicole. So then we have a question from Ikshidis. Which are the upcoming trends in fintech? So what's the new innovation that is about to come? I think, again, this is maybe for both of you, Nicole and Ruth.
Well, that's a hard question because, I mean, you've seen that big slide. I think that very nicely depicts all the things that are in progress, and some are much less evolved than others. I mean, I guess if you talk about the metaverse and Web 3.0, that's still in transition and evolving, and it will take years to evolve further. Certainly one area that is increasingly being researched and maybe become operable at some point is, for example, quantum computing, which is all about doing things much faster and being able to actually break the security protocols and sort of public key infrastructure we have today. And that in itself is, of course, a security risk. But I would also say AI is an area where you have broader AI applications that are still evolving. So agent-based modeling is a very interesting field if you think about up and coming stuff. It requires highly skilled data scientists So one company that we've invested in with our fund is called Simudyne, and literally you're counting the PhDs, everybody's got a PhD, at least one. So it is a little bit rocket science, but that's why it's so important then when you advise these firms to turn all of this knowledge into something that the market can actually use. And what the market wants to use is primarily something where they can make money. So unfortunately, even though we would also always say risk management, controls, protecting your data is the most important thing, people want to make money. So you have to combine the money-making idea, the economic value with the science that is evolving. And that is very interesting because that ended up me introducing them to Turquoise, and that's why they're working with the LSE platform and the algorithm testing for banks that actually want to do it to outperform others.
I think I would just add one thing from my perspective. I mean, in a very simplistic way, we obviously look when we launch the company, obviously what is our competition and so on. And from that perspective, if you have an idea, and you might have some ideas from your own background that you think are worthwhile pursuing. For us, what was important to see, well, the US is a market that's already very crowded and there's a lot more competition, but then Europe or Africa or other areas have less of that. So it's sometimes easy to just move into another market, but also within finance, we've seen that retail banking, everything that's connected with retail banking and payment systems is already much more advanced. And then there's areas that tackle the larger deal space, like what we did is when we looked at securitization, CMBS is a secondary trading market in these type of bonds, that doesn't exist yet so much. So commercial banking has a lot less fintech related to it or associated with it than the whole retail banking space. So which deal with retail customers, where those large so we looked at B2B versus C2C or B2C. So that's some other way to possibly look at it.
Excellent. So very comprehensive answers. In the meantime, we have many more questions in the chat. So let me move to Sam Rex's question, which is quite articulated one, again, to both our keynote speakers. What role do you see FinTech playing in growing purpose-driven banking institutions, and therefore obviously career opportunities, referring to institutions that have a social or environmental mission embedded in their business?
I mean, just to briefly say, there's a lot of product innovation in some of the sort of more neo-banks and neo-financial services providers when it comes to green financing or environmental savings products, or if you buy a certain product, they plant a tree. I mean, there's little things on the edges. I think there's a broader agenda around ESG, which also has to do with governance. And I think that's an area where large institutions have to, follow the corporate governance code, which is very strict in the UK. And the smaller institutions that are growing are sometimes still grappling with governance as a challenge. So whilst I see a lot of interesting inclusion innovation and green innovation, which is also spilling over to the big ones, because it's almost a reputational must, I think the governance piece is maybe something that still needs a bit more evolution on some of the fintechs.
Yeah,
I want to add?
No, nothing to add from my side on that.
Okay, so now we have a very straightforward question by Eugene, who is asking, I guess, again, both of you, if you are a bank CTO, which would be your top 3 tasks in the next year?
Which will be, sorry, what?
Your top 3 tasks as a bank CTO.
Ruth, would you have anything on that?
Yeah. Well, I mean, I can tell you certainly from a big bank perspective, given I spent 11.5 years in Citigroup, and that's definitely a big bank. The problem we always had is that technology is very parochial, right? They own the technology, they develop stuff, they take forever. You do a business requirement document, they do something, they come back, it's not what you want. And that kind of can happen 2 or 3 times until X amount of million have been actually thrown out of the window. And then people say, oh, let's work with this vendor then. So I think we actually are moving now in a more partnership outsourcing sort of space, which comes with its own risk, which is why the European Banking Authority has helpfully issued outsourcing guidelines that everybody had to comply with this year, including the UK. But I think one area is collaboration with fintechs to understand better what's out there and how it can help your process. For a CTO in the big banks today, the biggest challenge remains the legacy technology, the fact that all the payments platforms and all the data sort of warehouses are still very old technology, sometimes very static, and they can't therefore adapt quickly. They can't add new products quickly. And what people will need to do is rebuild the underlying back office infrastructure, potentially using cloud providers and other more agile things where you can actually add on stuff. And as part of that is, of course, also getting your data in the right place, pulling it all from your 100 different systems internally and normalizing the data so you can actually do analytics, but you can also comply with requirements in regulations such as trading, reporting, and other things. And that is the biggest thing where heads will roll because no one will get it right first time. And that's why the big IT departments in the big banks are so reluctant to change. They don't want to change. And no matter what good fintechs I provide to the banks, look, this could fix your problem or this could. Very often they're like, I don't want to add on more stuff to make things easier because my underlying system isn't right and the data isn't right. But people are not tackling it and the problem will get bigger and bigger. It's sort of the iceberg under the tip of the iceberg, if you so wish.
Yeah, I would totally agree. It's interesting because that's exactly what we are experiencing. Being a fintech, talking to banks, we obviously offer them a sort of external cloud solution that we can even program on site, because a lot of the CTOs and banks don't like cloud solutions yet. They are still very sort of afraid of all of this, and but it's a problem with their legacy systems, and it's very hard to get a foot in the door. Even if they acknowledge officially that they should change and they would like to adopt a new technology, it's like internally their hands are just bound. And I don't know when this is going to be resolved, probably never, but it will definitely go a long time because also within the bank, I mean, having also worked a long time in a bank, we always treated the whole CTO IT area as like not very important, because we felt that the trading and bringing in the business and so on and capital markets that was making the money is other people who are paid really loads of money, and this is where everything, all the resources would be spent on that, bringing in new deals, doing new deals basically, and the IT side would have a lot less money available to really work with, and I think it's been something that's been neglected within banks for many years, and therefore you have these old systems, and yeah, it will take a long time to solve.
So I think this is precisely, both your answers are very interesting, and they're precisely linked to a follow-up question from Eugene again, who's asking, how can a finance institution supercharge its transformation? So for example, how can major banks like Barclays, for example, allow companies like Wise to keep grabbing more of their FX business month by month?
Well, I mean, okay, let's just talk quickly about cross-border and FX, right? The problem there is that even a Wise is relying on the old banking rails, which really are only messaging rails with Swift, right? So the whole area of cross-border payments needs complete innovation, and some businesses are working on that. I'm advising one of them, which is creating a new type of cross-border wholesale banking ledger by connecting the banks directly through the back office, which I think is a clever idea, because we don't really want to talk to central banks to connect them with each other. But the challenge is, of course, that Barclays sits exactly on that IT legacy stack like all the other big players. And they will have to make some radical changes. Now, FX itself is to do, of course, with transparency and scale. Wise has a market that is more on the retail side, which of course allows lots of volumes of consumers to transact, but the transactions themselves are smaller in value. And it's really a business decision to say, okay, I'm going to serve as Barclays some of the payment institutions and e-money institutions that themselves provide the services. And if Barclays is not serving Wise, then Barclays will serve some other money network operator. But the market is sort of a bit divvied up on that, right? So it's not like Barclays isn't there. Barclays still provides the FX because Wise doesn't have FX capability. They're buying it for somebody. They have to have their bank accounts all around the globe because, of course, the settlement has to be done at least at a commercial money layer in the banks. So we're talking really about overlay service over overlay services. So it's not exactly, Barclays is just never specialized in a consumer retail FX proposition, and they never do it because now we have enough players in the market.
I see. Okay.
I think, I mean, maybe one very quick point from my side there is also what we must not forget is that, of course, larger companies are less fast or sort of much slower, let's say, to adopt a new technology. But it's also, we must not forget, all these technologies are relatively new, a lot of them less than 10 years. And we have all the emerging cybercrime and so on, that obviously we don't know yet how secure all of these technologies are. So it still needs to be tested somewhat more. Also, I mean, do we always want to adopt everything as fast as possible if you're a large entity? Probably not. I mean,
yeah. I think, Nicole, you have already answered one of the questions that Robert has posted in the chat, asking both of you why fintech has taken so long to make an impact, specifically why large banks don't seem to have been affected so much by all these changes. Maybe they are being affected, but more slowly than would predict or like.
Yeah, which is normal, right? There's this whole first mover idea, and there's a lot of literature written about that. You know, your first movers, and you get to the next step until you get over that certain curve with new technology that is being adopted by the larger players. But they will always be the last in the chain because, and they kind of have to. They're not only slower because of legacy systems and more compliance and more regulatory issues, but I mean they also have to protect themselves more. They have more customers. I mean, you know, Barclays or NatWest. If something goes wrong, then everybody in the country is affected.
Yeah, absolutely, yes.
Yeah, maybe just to add, I mean, don't forget that the large banks are the ones with a balance sheet, right? So when it comes to lending, you know, they got still the deposit side, exactly what Nicole says, and therefore they can do the lending. They're highly regulated. Don't forget that regulation always acts as a barrier to entry. And so even though we've seen an ecosystem of fintech evolving, it is very much ancillary and in partnership with banks because the ultimate lending, credit, I mean, the whole sort of old school taking deposits, being subject to Basel rules, and lending and credit creation is still with the banks. And also don't forget that the big players all have government contracts. So if I think about a Citibank or JP Morgan, they have contracts with the US government. So this is so tight, and it's such an extreme level of vested interest and an extreme level of balance sheet capacity for the large corporations and for the large government agencies that you just can't think away the big banks ever. I think it's just that the question is which banks can adapt quicker in terms of their internal IT stack, because that is something that will help their operational resilience going forward, and which are the areas where the banks will have to consciously decide not to compete any longer, including, for example, payments, which we've seen retail payments space very much disrupted, but it doesn't rely on deposit taking. Payment institutions, e-money institutions still have to ring fence money at banks. In fact, the UK High Court has just decided in one of the e-money institution cases that there's an obligation on e-money and payment institutions to completely make sure that client assets are safe, because if they're not, they will not be protected. So, I mean, then you as a user will be sort of third, second, fourth in line when things go completely belly up. Right?
This is excellent. I think in the there are a mixture of different questions in the Q&A session, some of which are from current students, so could be addressed from all of us in the panel, so we can give answer from different angles. There is one last question, which I think is just if you could provide a short answer to before we move to the Q&A. Then Mai is asking, how much of investment banking do you think will be digitized, and which part will require manual intervention? We will take all the other questions in the panel because they are much more about current student perspective.
Wow, I think it's a difficult one, and a lot around the trading can obviously be digitized fairly easily, especially when it comes to equities, etc. So that's in currencies. But when it comes to the big M&A deals, I mean, I think there is still a lot of human intervention needed. And these two things, I think, again, don't necessarily mean that to certain parts of the process. I think digitization itself is meant to help make things faster and help people interact more efficiently and faster. It doesn't cut out the actual discussion about the deal or transaction or the actual interaction. And there's still a lot of legal work to be done that won't be digitized, for example. So I think it's just there to support, and you can communicate through certain systems and make it easier, like the sharing of data, analysis, etc. But I think there is still a lot of interaction needed from the human side of input, and that will never take away. I mean,
completely.
I think it's important.
Thank you very much, Nicole, and thank you for all the questions in the chat. So let's do this. Let's start the panel now, chaired by Professor Marsh. During the panel, we will make sure to address a question that current students have posted in the chat, because those questions are more related to how at Bias we are ensuring that our graduates are ready for this new challenge. So, Professor Marsh, I leave the floor to you.
Thank you, Malvina, and thank you for inviting me to this. You picked completely the wrong person, of course. I might be a professor of finance, but I know nothing about fintech. I really should have been in the audience here, as I've been learning lots as we've gone along. And actually, you probably should have got my wife. My wife's also an academic, and her research area is in productivity. And one thing that she keeps on about is the skill shortages, which are holding back productivity growth in the British economy. But focusing in on what we've got in this panel here, I want to just go back to Nicole and Ruth and follow up on a couple of the questions in the chat. What do you see as the skills that are seriously lacking in the graduate supply coming into the fintech area at the moment? Where do we need to be developing the skills in particular? What is holding us back in terms of making the UK in particular, Europe in general, and presumably globally the world fintech area even more productive?
I mean, I'm happy to give just a few words. I think what is really important, apart from the academic curriculum, is to actually once in a while have sessions where you talk to actual people in the market, such as fintechs that are starting a company or investors that are looking at the space, whether it's seed investment or larger tickets, or a banker that talks about, you know, the challenges they have in the IT department. I think it's about getting a pulse of the real world and what's happening there. And I think the combination that you now have with the technology side and the coding and introducing people to the different types and forms of data science that is being in demand, with actual examples of firms that are using these data scientists to create new apps and new solutions, would also allow you to bring in maybe somebody from Meta or Google to actually talk about this and say, this is what we're doing. This is what my team has created in the last week. So it becomes much more in the moment and tangible. And the students will see that what they're learning with you is completely applicable straight away and create value.
Would you be able, either Ruth or Nicole, we have a question in the chat precisely on this from a current student who is specifically interested in wealth management. Could we maybe pin this a little bit down with respect to the wealth management industry? Any extra skill that you see as particularly relevant in that case?
I mean, I have not really exactly looked what's out there for the wealth management industry. But it usually, I mean, it is obviously, like we said in our presentations, and I think Ruth and I, we agree there, it's really the communication from the finance kind of modeling type of and finance knowledge to the actual IT guy. We need the in-between sort of data modeling, sort of data science connection, because also you might be dealing, I mean, and younger people are actually, I'm amazed, really, they're so much quicker at that now that I've been so long in the industry looking at the new degrees and everything. Yeah, obviously they are much quicker, but you still have a lot of people who have been much longer in the industry and are not so familiar yet. And so there is just a lag. There is a really big gap, I think. I mean, for the wealth management, I wouldn't be really best placed to say. I mean, it's really about the theories of efficient frontier and how to really pick the right stocks and how to build your portfolio to connect the whole finance world, you know, all the theories around asset management and portfolio management, etc., onto that space. Thank
you. I have another question which I've already seen is in the chat, but I'll come back to that at the end. So I wanted to broaden out the panel now. We've heard lots from Nicole and Ruth, but I wanted to introduce Vali Azimit, who's joining us today. He's the Professor of Actuarial Analytics with us at Bayes, and also hopefully somewhere in the room, yes, I can see him on my screen. We have Martin Rich, who's our Associate Dean for the undergraduate program at Bayes as well. We've heard a little bit, guys, about the skills that are needed by the fintech entrepreneurs. I guess the obvious question is, so what are we doing about it? What is Bayes doing about it? And perhaps we can start off with Vali to talk about some of the offerings, especially coming from your part of the business school.
Thank you, everybody. Thank you. Yeah. So I will give you an academic perspective of what we do at Bayes. And first, I would like to say a few things about data analytics, data science, related educational products that we have. And just to say that our emphasis is on consuming data, producing the digital world, and generate knowledge in 3 directions. Those are the main things that we are trying to achieve. One, about data, second, about analysis, and the third, as much as we could do in the monetization. From the data perspective, we tend to spend a good amount of time about data collection, data wrangling, and web scraping, for example. One example, data harvesting, just to make the students familiar with those kind of skills. But the main aim is to extract and explore data resources to create competitive advantage. And the use of technologies is a contemporary way. So that's the first direction. The second is about analysis. We can call it data analysis, where we try to train the students to capture data insights, so the data patterns are transformed into actionable insights. So I can give you some example, because that sounds very bombastic. And one is they use the natural language processing, or its parent known as computational linguistics, for analysis of large corporate text and video content, for example, to enhance financial advice. And also creating complex CRM customer relationship models. Those are just examples that the output of how we train our students. But the third one is about monetization. And one way that we look at that is to give students skills of explainability, and actually to give meanings to data patterns to technical audiences, and not necessarily have data analytics or data science experience, but also to non-technical audience, clients, C-suite, or any other managerial entities. Essentially, we try to train our students to have the ability to sell their own knowledge and high order skills. That's one thing. And the second is we, for example, use data visualization on any other intuitive, non-technical validation tool that plays a crucial role in explaining highly non-intuitive analytics outputs, and notorious example, the deep learning, and so on. So those are the 3 directions. But above all, we try to familiarize our students, to make the students to be familiar and interact with technology, and that includes coding and interacting with API. We mentioned about the quantum computing, and there are some APIs that are available that are in infant stage, so we can use quantum computing even at a small level. But what are our tangible educational success? I can speak about the MSc in Business Analytics that I created 5 years ago, and it's a great success. And I'm pretty sure that Malvina is going to speak about the new BAc in Finance, data science. That definitely she could say way more than me, because I don't know, but I heard only exciting things about. Yeah, that's my take.
Thank you, Bali. You talked a lot about skills that you add to students as part of the program that you offer. Could you just say a few words about the skills that you require from students when they come in? You know, what are the basic raw materials that you're building on?
Well, that is a little bit difficult, because it is an inhomogeneous in the sense that we basically assume that the students do not have coding skills. That's one of the things that the students that are extremely scared about, and we need to create some pre-courses and things that the students they learn that in advance to help them. But there is an emphasis on having some sort of technical skills, mathematical skills, because, for example, if you're thinking to be just a user of an analytics tool, that would be fine. But if you are in a large corporation where they will never like to put their data on any cloud-based platform, you have to create those capabilities internally and it means that you need bespoke knowledge about the algorithms and the mathematics behind, statistic behind that will require some high order skills. So it would be essentially, would be great that our students that will go a little bit further in the data science direction to have those kind of skills. Because at the moment we create analytics translator that they decide how much domain knowledge they would like to use and how much they would like to go towards more data science or data analytics skills. So be fantastic to have students that they have background and mathematics, and anything related to information technology will be extremely useful.
Super, thank you very much. And I'll take your advice now. I'm going to ask Malvina about the undergraduate program that she's been developing. We heard, I think, from Nicole a bit earlier that one of the things that she's looking for in the skill set amongst recruits is somebody who can be the interface between the finance side and the tech side. I'm hoping you're going to say that's what we're doing.
That's precisely what we are trying to do with a degree in finance and data science. Is, empowering our students to really, when they leave the degree, being able to target such a type of career. So this is not about hardcore skills in programming. It's all about learning how to program in Python, in MATLAB, using different languages, and addressing all the different aspects of data science, as Vali has been the founder of this new stream of teaching at Bias, as mentioned. So we train our students in traditional methods to make the data speak, but we also make sure that are aware about the most recent development in data science in terms of machine learning, supervised and supervised learning, data visualization, NPL, for example. And we spend a lot of emphasis in making sure that while they achieve the technical abilities to handle all these not easy part of making the data speak, they acquire tools to be able to translate the information in a manner which is sensible and understandable for non-data-driven professionals. So ideally, one of our graduates, hopefully of this degree, will have coding ability, and we also have the ability to interface between developer and pure, CFO of a company or a CEO of the company, and make sure that they can bridge this gap and link. This seems to be missing in the industry, and I think this is one of the reasons for which, as some participants in the chat were mentioning, this fintech revolution is going so slowly, or perceived to be going so slowly, precisely because we don't have this type of figure in the workplace that can actually translate and speed up the dialogue between different instances of the company. So that's what the new degree in finance with data science is aiming to do. And obviously, the idea is that, yes, data is a new oil, but it's extremely important to know how to extract it, to know how to make it speak in the correct way. And let me say also to have fun while doing that. Data science applied to finance can be a lot of fun. And So this is also why we created this new degree.
Fabulous. Thank you, Malvina. Time is ticking by, and I wanted to make the most of Martin being with us. Judging from some of the questions in the chat, we've got several people here who are at least contemplating becoming fintech entrepreneurs. We've heard quite a bit about finance, we've heard quite a bit about tech. We haven't really talked so much about entrepreneurs. Martin, you're from the more management side of the Bayes faculty. What are we doing to help our students be entrepreneurial?
Lots and lots and lots. So I actually want to pick up on Eugene O'Connell's question at the end about whether the landscape for financial services and so on is going to start looking like big pharma. I think the short answer is yes, but we actually do a whole lot. I spent a lot of time with final year students, particularly looking at different industry structures, looking at how we disaggregate people are working on coming up with ideas and what the scope is, particularly for small businesses and the whole area of can a small business compete with a larger one. I have a whole case study which is all about why so far the high street banking sector has not been transformed by fintech, why people like Starling and Monzo and so on have had an impact, Revolut have had an impact, but why that hasn't been the same impact that we've seen in other sectors. So we do a whole lot of material, particularly across a whole range of different students around topics like that. We build entrepreneurship in many parts of the curriculum, and there's actually a move not just at the Bayes level, but at the City University level to ensure that every student who does an undergraduate course here gets a certain number of employability skills and a certain number of entrepreneurship skills. So there's a big move to understand that even if you're going to graduate and you think that your future career is with Barclays or Citibank or whatever, you need entrepreneurship skills. And those are important because you might be with Barclays or Citibank, but you need to understand the entrepreneurial landscape. You need to understand, maybe coming back to Eugene's question, maybe you need to understand who the small players with bright ideas are, who you're going to work with. So we do a lot to give people the entrepreneurship skills. And the other thing which we do is pick up on what Malvina has talked about and give people the skills to understand both the tech and the practical, the business aspects. And I want to bring that to life by saying, when Ruth was talking, she talked about outsourcing and legacy systems and seeing IT not as crucial to a business and keeping up with cybercrime, and whether or not you actually want to have first mover advantage. The tech businesses are littered with examples of first movers who got in trouble because they were too keen to be first movers and became first movers. These are issues, these have been issues for technology since the 80s at least, but with every generation of business, every business, they are played out and used in different ways. So part of what we are doing is training our students to understand what these mean for each business sector, each generation of technology, and being able to understand what they mean in every case. I hope that's kind of addressed the question.
It has, thank you very much indeed.
Thanks.
I think it's also addressed Maria's question, which came in the chat a little bit earlier, which were, are there any pointers on how to bridge the gap between theory and practice in the fintech area? So I think we'd like to think we're providing the theory, as it were. Obviously, because of Bayes' position as being at the more practical end of the business school, we try and provide our own take on the practicalities. But obviously, this interfaces with particularly the professional experiences you talked about. Very important to allow the students to develop their own understanding of the marketplace that's out there, given the skills that we've given them. But on that note, I wanted to go back to Vali, because I know that you're well integrated in your master's program with the practical world of fintech. How do our students get to experience the real world in the MSc that you run, Vali?
Yes, we do have a program that we provide the students on summer project, but just to be very specific, to give a clear example, we have project for 3 years with Bank of England, and we use natural language processing capabilities to support Bank of England with their supervision duties. So specifically, to create an automatic system to group insurance company into similar company with similar risk profile. Why? To allocate the right supervisor to each insurance company in an efficient way. When you use that natural language processing, when we have been doing that for 3 years with our students over the summer. One other way is I have been involved in creating a virtual financial advisor. Why? To create a cost-efficient financial advice. How? By creating a chatbot for risk profiling and then provide a first-hand financial advice at a reduced cost. There was a combination of using NLP, but also that to translate into meanings to have an idea of about the risk appetite of the potential investor. So those are examples. But in general, we have the summer projects where we engage the students with projects that are provided by industry. We don't create that. We don't try to be in our very own pure academic space. We allow the industry to come to us, and basically we help the students to be more employable, and it's a win-win situation. That's how we do the MSc in Business Analytics for 5 years. I've been doing
Fantastic, thank you, Vali. Time is ticking by. I wonder if I could just ask one last question of our two keynote speakers, of Ruth and Nicole. You're women in fintech. Most of my research is in the foreign exchange market and the dealing room end of the spectrum, which is almost entirely male. Was when I was experienced in that area and still is. And one of the guest speakers that I usually bring into my classroom is one of the few women I know that works in a dealing room of a major bank in London, and she talks about how to cope in a kind of a male-dominated environment. What's the fintech environment like for a woman? Is it any different?
I think that's an interesting question. I've never thought about that, but I think it's pretty much the same in the same proportions, men, women, what you see in the finance industry in general. I guess if you're in some area of trading, or depending on what area of the fintech you are in, right? I mean, you will find a lot more male participants or male colleagues than female. I mean, for a lot of females that we typically hire, all our marketing obviously, social media, digital marketing, they're all females. And then all the IT developers, actually in the IT developer, the programmers, is probably 50-50. Actually, quite a few women good at programming. But yeah, I mean, it's still quite, I guess, male dominated in certain areas. And it's still tough. I mean, it's in several ways tough, because first you're a startup and you're not known, and that's one other thing I experienced, going from a city group or saying hello, here's Deutsche Bank, to hello, here's nobody, Finloop. It's a different it's already a different level.
Yeah, I think it has to do a bit with the attitude of risk taking as well, exactly as you say, Nicole. I mean, it depends on how much risk you want to take, but I think it's really encouraging to see more technology, coding, data scientists, people from a female work perspective. And I think we want more of those in. Everybody's heard, the stories about biased AI. We need just more people coding the fabric, and it needs to be more equal, because there are always unconscious biases that even come through in that space, which really had to be avoided.
I think I've got space for one last question, and I'm going to go back to the chat for this. This is from Otterbeck, and I guess now we're going back to our keynote speakers in particular. If you were to start a fintech company, regardless of the area, in an emerging market, with virtually no existing fintech capacity, what would be your strategy? Or should you just not do that at all and stick in the major markets? It's a bit of free consulting you're giving out here.
Yes. Yeah, I mean, it always depends who's asking. I mean, if it's someone who has 20-25 years experience and you have the right contacts, it's all about contacts, right? You want to raise your first money somehow. And so I was lucky that my business partner and co-founder already launched 2 fintechs before successfully that were sold over 100 million each. So he already had investors that came to invest another time with them because they had invested previously with it. So with the seed capital, we didn't have any difficulties. So you have to have very good contacts, or if it's an emerging market, maybe also government aid and help. I mean, we really looked into funding programs officially, like European, or also specifically maybe for emerging markets, there are other funding programs. Our part of our business is set up in Spain, so we have one of our companies, or one of the sort of part of the shareholding is based as a Spanish company with Spanish directors. So we were able to apply for grants of the Spanish government who had specific fintech SME. So again, you might want to look at these type of options. And then it can work. What you have to then in the long run plan, once you have your seed capital, is also who's going to pay for that technology that you're bringing in. You know, do you need a mass market, and do you have that? Are you going to be paid through subscription models, through getting a cut of a trade? And is that going to be sustainable? And how long do you need to make it sustainable? And is your market big enough for that?
Yeah, maybe just to add, I mean, I think the most important is to solve a problem. And I think emerging markets have potentially more problems here and there. And if you have some technology infrastructure like internet availability, broadband, mobile network, that allows you to solve problems leveraging that infrastructure backbone, but have a solution to fix a problem. That's the most important, I think.
Wonderful, thank you. I think our time is up. At this point, I'm going to hand back to Dr. Marchesi to probably close the session.
Okay, thank you, Ian. Thank you very much. So thank you very much all for attending this event. I want to thank our alumni, current students, some prospective students, and of course, I want to thank our two keynote speakers, Ruth and Nicole. Thank you very much for making us understand much in depth the world of Fintech and the hottest development in this world. Thank you, Professor Azmi, for joining us and explaining the approach to data science that Bias is leading on. And thank you, Professor March and Dr. Rich also for joining us and helping us deliver this event. Alumni, you are going to receive pretty soon, I think, a quarterly questionnaire from me. I am trying to gather information on your view and your thoughts about way forward. So I'm trying to learn from your experience how we can improve our teaching approach for current and future students. I think for the current students, this was also a very interesting networking event. And watch out for this space because many more interesting alumni events are coming to gather us together and understand the most recent development in the finance industry and how Bias is stepping up to the challenge. Thank you very much, everyone. Thank you so much. You have a good day.
Thank you very much.
Thank you.
Thank you.